Okay, good morning, ladies and gentlemen. Welcome to the webinar number 3, which is conducted prior to the iPURSE. iPURSE, or the Peradeniya University International Research Session, is the signature annual conference of University of Peradeniya, which is scheduled to be held on 19th and 20th of August 2021 at the Faculty of Arts, University of Peradeniya. It promises to be a wonderful platform for researchers from a wide spectrum of disciplinary backgrounds to showcase their outcomes. This webinar is part of a series of pre-conference webinars organized by the iPURSE committee, together with the International Relations Office, InRO, of the University of Peradeniya. I am Amila Bandara. I am the technical program committee chair of Faculty of Management in the iPURSE organizing committee. The title of today's webinar is the prospects for the Sri Lankan capital markets and the economy in the aftermath of the COVID-19 pandemic. The participants are very warmly welcome for this webinar, and you are kindly requested to raise your questions through the chat session, and our moderator will be taking them up during the question and answer session. So it is my privilege to introduce to the moderator and the coordinator for this session. He is Professor Athula Ekanayake. Athula Ekanayake is a professor in accounting in the Department of Business Finance, Faculty of Management, University of Peradeniya, Sri Lanka. Currently, he serves as the Dean of the faculty. He received his PhD in Accounting and Finance from Macquarie University in Sydney, Australia, MBA from University of Peradeniya, Sri Lanka, and BSc in Business Administration with first class honors from the University of Sri Jayewardenepura, Sri Lanka. He is also a fellow member of the Institute of Chartered Accountants of Sri Lanka. Professor Ekanayake also serves as the president of the Association of Kandy Chartered Accountants and the vice president of the Sri Lanka Finance Association. He teaches corporate governance, financial statement analysis, financial accounting, financial reporting and auditing. His primary area of research is corporate governance with the focus on developing countries. Before joining academia, Professor Ekanayake covered his articles at KPMG Sri Lanka between 1995 and 1998 to obtain the membership at the Institute of Chartered Accountants of Sri Lanka. Later, he served at the DFCC Bank until 2004 in the capacity of an accountant and a senior accountant. Now, his experience in the industry and the academia counts more than 2 decades. With this brief introduction, I have the honor to invite Professor Athula Ekanayake to moderate the session. Over to you, sir. Thank you.
Thank you, Amila, for a very generous introduction. Good morning to everyone. Welcome to the webinar organized by the iPURSE Committee 2021 at the University of Peradeniya. Let me warmly welcome the two distinguished panelists for this webinar today, Professor Lalith Samarakoon and Senior Professor Jayewardenepura. And also I would like to welcome the audience. Ladies and gentlemen, now we all know Sri Lanka is an open economy. Now it is almost close to 45 years since we have opened the economy for the private sector. Now, in an open economy, which is mainly promote the private sector, and in the private sector, capital markets plays a very significant role. And so, if we look at the structure, economic structure of a well-developed economy, market-oriented economy, now there are certain prerequisites. One is that all the private sector investment-oriented economy should have a well-developed share market, capital market, and there should be a larger large number of investors with diverse share ownership of companies, and also there should be an active market for corporate control. Now, since 1997, now we have almost reached 45 years that we promote open economy concept strategy. We adopt open economic strategy. Now, we have some questions. In fact, is Sri Lanka a market-oriented economy, even after 45 years of opening up of our economy for the private sector? Does our capital market contribute enough to our GDP? So those are the questions that many of us has. Now, to address all these aspects, so this webinar series basically look at the prospect for the Sri Lankan capital markets and the economy in the aftermath of the COVID-19 pandemic. In fact, now with all these things, the COVID pandemic has had various impact on the economy, and those impact has a greater influence on emerging economics or developing economies, obviously. So, so with that very brief introduction, let me introduce the first speaker for today's webinar, Senior Professor Harindra Dissabandara, to talk about recent trends and status of the Sri Lankan capital markets. So Professor Harindra Dissabandara is a Senior Professor of Finance and Corporate Governance at the Department of Finance, Faculty of Management Studies and Commerce of the University of Jayewardenepura. Professor Dissabandara also served as the Executive Secretary of the Sri Lanka Finance Association. Formerly, he served as the Director of the Capital Market Education and Training Division from 2008 to 2011, the Director General of the Securities and Exchange Commission, we known as SEC of Sri Lanka between 2012 and 2013, and the Deputy Secretary General Finance Affairs of the National Economic Council of Sri Lanka. So more recently, he served as the Vice Chancellor and CEO at the SEGI's campus during his sabbatical period from 2019 to 20. So Dissabandara's main area of specialization is corporate finance and governance. His main area of teaching include corporate finance, corporate governance, financial management, auditing and strategic management. So Dissabandara obtained his BSc in management special degree from the University of Jayewardenepura in 1993 and MSc in management finance specialization from the same university in 2000. He obtained his PhD in finance from Chuko University, Japan, under the prestigious Mombushu Scholarship in 2006. So with that brief introduction, I'm pleased to welcome Prof. Dissabandara to deliver his speech on recent trends and the status of the Sri Lankan capital markets. Over to you, sir.
Thank you, Professor Athula, for kind introduction. Professor Lalith Samarakoon, good evening, sir. And Professor Athula, Dr. Amila, and dear participants, good morning. As you know, Sri Lanka, we have more than 100 years of share trading history. And today we are going to discuss about the recent trends and the status of the Sri Lankan capital market. And I have about 30 minutes. So a lot of things to discuss, but let me share some of my thoughts in brief. I hope you can see my PowerPoint. So as I told you, even though we have more than 100 years of capital market, share trading experience in the history, in a formal market from 1985 to 2021, 36 years, we can see a lot of ups and downs. The early periods, we were very low and our all share price index was below 2000. And we were about to reach 9,000. And now we are here. So this is our history and the story about the Sri Lankan market, especially the share market. And the last 3 months, 3 to 4 months, people were talking more about this. And again, there were rumors and discussions on a pattern like this, which was similar to 2009, 10, 11 period. But it didn't happen in that way. But if you take the last 3 months, it's was little volatile from 7,000 to 9,000 range. And if you take the global markets, Sri Lanka is in white. So after September, October 2020, in almost all the markets, you can see this development. During the early part of the pandemic, very difficult to explain why it is beyond the fundamentals. Every market we can see a hike, but after during the last 1 or 2 months time, it has been declining. So with this, if we compare the key statistics 2019 and 20, so we can see daily average turnover increased by 150%, 19 to 2020. This is a plus point in Sri Lanka. And if you take this, the contribution to total market, the structure is changing dramatically, because in 2020, we have total foreign investor contribution only 22%, whereas the local presentation is 78%. So compared to 2019, now it is more a local market participants, and the foreigners are moving away. And you can see in red net foreign outflow compared to 2019 to 2020, it is huge. And when it comes to valuations, we can see from 2015 to 18, so P's are very low, and we have started increasing. So this shows we had an opportunity and market was very attractive and cheap for the buyers. And now it is around 10 to 12 range. So compared to many other regional counterparts, so I think still Sri Lanka should be able to attract more investors. And as far as accounts opening are concerned in Sri Lanka, 2015 to 19, there has been in a declining trend. But in 2020, so we have about 81, and it should be more than that. This is mainly because of some of the initiatives taken by the CSE, especially under their digitalization approach. And if we take pre-lockdown period and post-lockdown, so in Sri Lanka, pre-lockdown period, we had negative performance, 25%. But during the lockdown, post-lockdown period, we have around 39%, 39.9, that means 40% up. So this is difficult to explain, but during this period in Sri Lanka, there are many other factors affected. Importantly, the bank rates were very low, and some companies were doing well while majority not the case. But anyway, this is what happened during the post-lockdown period and pre-lockdown period. And net foreign outflow, it's increasing compared to pre-lockdown period and post-lockdown period. So it's significant, and it will continue, I hope. And under digitalization project implemented by the CSC, there were several approaches, as you can see. So these attempts to a certain extent help the market to get an idea, and you can see here using the mobile app. These are the accounts opening during these days, and here the most important thing for me to discuss is the popularity among this age range, 25 to 39 range. So when we try to develop something strategy, so we need to think about this age range as well, specifically this age range. And if you take the Sri Lankan financial sector, total financial sector, still the banking sector or the deposit taking institutes are dominating the entire financial market. And superannuation funds are 15%, central bank is 10%, and insurance 4%, and all other specialized financial institutes only 1%. So this shows the entire story about the size of the Sri Lankan finance sector. So total value is 110.3 billion US dollars, and it is similar to 20.2 trillion rupees. And this is the composition of Sri Lankan capital market in 2019. So the total value size is 8.7 trillion rupees, which is equal to 48 billion US dollars. And 33% represent the stock market capitalization, while government securities, the large portion, 64%. Now you can see the major player is the government securities, and corporate debt is just 3%. So this is the popularity or the significance of Sri Lankan corporate debt. And if you take the situation in the South Asian region, so we have only 1%. Sri Lanka contributes only 1%, whereas Bangladesh 3%, Pakistan 4%, and India 92%. So we should understand the size of our market, compared to other players in the region. So with this, the market capitalization as a percentage of GDP, Sri Lanka is having, in 2019, it's 18.7. But whereas Hong Kong, it is 1,339, and India 76. Now you can see out of the total economy, the capital market, the size of the capital market. So if you take 2008 figures, Canada, United States, almost more than 100%, and there are countries having 300%, 260%, Switzerland, South Africa, and Singapore 187%. So when you take number of companies compared in other countries, so the average is, if you take the 22 countries, average is 825 companies per country. We have 289. So throughout the last 2-3 decades, we have been 232, 290, 95 companies. So we have to think about Sri Lanka, and to, sometimes we can think attracting more companies into our market. And market size, Sri Lanka is 22nd place, and the average of 24 countries, it is 951 US dollar billion, but we have only 15.8, that is 16 billion. And stock market value traded as a percentage of GDP, it is just 1.2. 1.12% in Sri Lanka. And in other countries, Hong Kong, China, South Korea, you can see it's more than four times. And market liquidity is fairly low compared to other countries. And stock market access to smaller firms, because we have larger number of smaller firms. In Sri Lanka, this number says 57%. Means when you forget about largest 10 capitalized companies, that means we have 57% of room, whereas China it has 91. So this is not a very bad situation, but we can think about this, and this is what we have gained so far for the smaller firms. It's 47%, but we are below the average 61.3. And if you take the free float, the public float in Sri Lanka, it is below 30%. But in most of the country, it is above 40%, and above, we can see some other countries, they have the more than 50%, 60%. So free float is important as far as liquidity is concerned and market operations are concerned. And IPO proceeds are given in Sri Lanka last year, the 2018, it is 0. But you can see other countries, Bangladesh and China, Hong Kong, India, how they have utilized IPO industry. And the number of IPOs, so we have not utilized IPOs, and in the region, most of the countries, they have done a lot, and they have formulated more capital. And this is how CSC has expanded through social media during the current, recent years. And just to show you, there are some attempts or suspected offenses in the market. Mainly these three are popular from the very beginning. But this doesn't say this is very negative, but there are some evidence: insider dealing, market manipulation, and front running attempts. But we need to investigate this and find out. But this can be in Sri Lankan market, and this is one of the major concerns I have. So as far as our total population is concerned, so we have about only 900,000 to below 1 million CDS accounts, and the active participants are very low, and active CDS are the number is 9,000 CDS accounts, and about 10 years ago, but now it is around 30,000. However, as a percentage, it is less than 1%. So this is a big point we have to understand, because we need to attract more people into the market, and for that also we need to do a lot of things. And if you take the issuer side companies, so we have about around 80,000 companies. If you take 50% is suitable for listing, so now we have listed only just below 1%, so just 7.75%. So this is the potential we have. We have to take this positively. And if you take the equity market, basically, depending on the things we have discussed, we have to look at three main areas: the market size, liquidity, and the strengthening the brokerage. So looking at this, I think we have to bring more companies into the market, so that what we can do is we can think about VOI companies and multi-currency board. We can popularize it, and even to have an active market, we can think about market makers, which is not available in Sri Lanka. As I told you, our public float is very low, less than 30% compared to other countries. And there are some instances where we can see 2%, 3% public float in some companies. So we need to seriously think about that. If it is below 10%, is it a public company? So we have to take some action in order to increase the public float. And in the long run, medium to long run, we have to think about transaction cost, which is very high in Sri Lanka, one of the highest in the world. and we can think about universal brokerage, and even the government, I think they will positively think on this. We can reform some of the commercially viable public enterprises in Sri Lanka. And if you take the
5 more minutes.
Okay, and if you take the government security side, so still we need to think about the treasury bond and treasury bill, and we have heard and we experienced several stories about treasury bonds and bills. So I think considering this aspect, government bond securities market, so we have to establish an efficient benchmark yield, and at the same time we have to think about the primary market competition. At the same time, credibility and the predictability of treasury auction. For that, we have to adhere to market-based auction practices. Even though we have done some of the fine-tuning, I think in the secondary market trading system reforms and treasury auction calendar must be published in advance. And if you take corporate bond market, which is not very popular, as you have seen, it's about 3% of the entire market, capital market. So corporate bond market, we have to think about the market size and the liquidity. For that, we have to increase the institutional investor participation. That is one of the major things we can do, and to lower the transaction cost. And unit trust industry, so we can say we have even though it's more than 2-3 decades old, we have only 51,000 unit holders. So we need to popularize this industry among the retailers, and that is the only option and best place for us to train newcomers and broaden the mutual fund products. For this, the main thing is we can have education and marketing campaign all over the country, and to broadband the investor education. So that is one of the things. And some long-term attempts should be the introduction of closed-end funds and ETFs and REITs. REITs are introduced, but we need to popularize it among the participants. And if you take EPF and ETF pension funds, so main concern should be, I think, strengthening the professional fund management capacity. For that, we have to policy framework should be gradually enhanced for better portfolio diversification, and we should enhance the ICT capacity via training and investment in the area. And basically, this is not very much familiar in Sri Lanka. The subscribers should be familiarized, and they have to make a choice for asset allocation. And derivatives should be in Sri Lanka, but I think the problem is if you don't understand basic products, bonds and the equities, so it is very hard for you to understand. But anyway, this should be enabled in our SEC Act to have this product, and at the same time, we have to have some infrastructure like clearing and settlement, and DVP, dividend delivery versus payment system, and required training in relation to this area. And to do all those things, I think the most important area is education, training, and licensing. Educating almost all the participants, especially the investors. So this aspect is very important, and we can think about not only ad hoc presentations or awareness campaigns. We can think about long-term training and education process, considering schools, universities, workplace, rural people, then especially the housewives and societies and clubs. So that should be the approach for us to enhance our education and training in the area of capital market. So with all these points I have pinpointed, I would like to suggest this proposed capital market roadmap containing 10 points. One is to expedite the SEC Act amendments. We have been, talking about this, doing various suggestions throughout the last 10 to 15 years. But I think we should come out with a good or sound SEC Act. And we have to demutualize the Colombo Stock Exchange, which is a member on entity. So have a good governance and transparent entity. So we need to demutualize this. And in my list, I would like to say this is the most important thing among other things. So education and awareness, as I told you a little while ago. And we can think about listing large corporations, public and private, and there are a lot of private companies not listed. So we can think about attracting them into our market and new funds, and to develop infrastructure, to develop the corporate debt market, which is at the moment, a debt market, and to develop the unit trust industry for retailers, and to strengthen the risk management system, RMS, clearing cooperation, delivery versus payments, risk-based capital supervision. So these are essential risk management tools, and to develop new products, ETF and commodities. So these are the suggestions for me. If there is any question, we can discuss. Thank you very much. Prof.Athula, over to you.
Prof.Dissabandara, for very detailed presentation with very updated statistics. So let us move to our next presentation, which will be conducted by Professor Lalith P. Samarakoon. Professor Lalith Samarakoon is a professor of finance at the Department of Finance of the University of St. Thomas in St. Paul, Minnesota. Most recently, he served as the Secretary General and the Chief Economist of the National Economic Council of Sri Lanka. Formerly, he was the Professor of Finance at Sri Jayewardenepura and the University, Sri Jayewardenepura University and the University of Houston. Professor Samarakoon also serves as the President of the Sri Lanka Finance Association. He graduated from the University of Sri Jayewardenepura with a BSc Special Degree in Business Administration with a first-class honors, an MBA in Finance from the University of New Hampshire, and a PhD in Finance with specialization in International Finance and Economics from the University of Houston. He is also a chartered accountant and a certified financial analyst. Professor Samarakoon teaches global finance policy, global economics, and financial management, and serves as the director of 2 China Study Abroad programs. His primary area of research is international finance and economics, with particular focus on emerging market and developing economies. As an international financial economist, Professor Samarakoon has consulted with the World Bank, United States Agency for International Development, and the Asian Development Bank for nearly 3 decades in financial sector development. With this brief introduction, I have the honor to invite Professor Lalith P. Samarakoon to deliver his speech on prospects for the global economy and Sri Lanka after the COVID-19 global recession. Over to you, sir.
Thank you. Thank you, Professor Athula Ekanayake. Good morning to everyone participating in this webinar today. I am very pleased to be here, and thank you very much for the invitation from the University of Peradeniya, from the iPURSE organizing committee, to deliver a session on the prospects for the global economy and Sri Lanka after the COVID-19 recession. I want to thank you, Professor Athula Ekanayake, Dr. Amila Bandara, as well as Professor Dissabandara, who is my colleague here presenting, co-presenter, for your participation and invitation to the seminar. Welcome, everyone. And I'm quite happy to be talking about a topic of very current importance. And my purpose here is obviously within 20-30 minutes time to give you a very broad overview of the global economy and the Sri Lankan economy after the COVID-19 recession. And during the discussion, we'll be able to perhaps talk about more details about any questions you might have. Let me first start with the COVID-19 recession. What do we really mean by that? Obviously, we have all witnessed that, gone through, have been personally affected by the COVID-19 health situation. There was an unprecedented drop in the economic growth. As you can see in here, 2019, 2024 quarters. In the first quarter, you can see in there, I have the Japan, US, China, and in blue, Sri Lanka. In quarter 3 as well, this is Sri Lanka dropped by about 16% in quarter 1 and 16% in quarter 2 as far as quarterly economic growth. While there was strong recovery in quarter 3, you can see all the countries came back up very strongly. Mind you, these are the quarterly growth rates. If you want to think about annualized growth rates, these have to be compounded or at least multiplied by 4 in order to get the annual rate of growth. So these are tremendously large drops as well as gains. So this is the economic impact. As you can see, overall, there's strong recovery in quarter 3 as well as some recovery in quarter 4. And this chart shows the overall annual drop in economic activity for the countries listed here. So overall for 2000, we have obviously dropped by only 3.6% as far as Sri Lanka is concerned. And other countries obviously experience higher drops in economic activity. So it is in this context that we are talking about the impact on the global economy and Sri Lanka. So what did governments do? Well, in order to address the situation, governments around the world began implementing various fiscal policies, accommodative fiscal policies. That means the governments increased spending to provide stimulus to the economies. That included stimulus to households, firms, more healthcare spending, government investment programs, various unemployment benefits, government guarantees, etc. As you know, that Sri Lankan government also implemented some of these programs. As a percent of the GDP, advanced economies spend about 13% of their GDP on this new fiscal spending, whereas Sri Lanka spent about 0.5% or 0.5%. Obviously, being a small country, our space for spending larger amount of fiscal, new fiscal expenditure as a percentage of GDP is limited. But this shows that governments, in fact, prepared themselves to provide more stimulus to the economies. Secondly, the governments around the world, central banks around the world, obviously introduced more accommodative monetary policies. These included cuts in the interest rates, the policy rates to very low levels. As you can see, before March 2020, as well as after March 2020, the policy rates of various central banks around the world and policy rates drop by about 2 to 3% overall. In fact, in some countries like Japan and Switzerland, the rates are negative. And obviously in some countries, rates are zero. So you can see that in Sri Lanka also, that we reduce the policy rate from about 5.5% to 6.5% to about 5.5%. So these are some of the actions taken by the central banks around the world to provide easy monetary conditions in order to accommodate or to mitigate the risk from the COVID-19 recession. As far as the 2021 and 22 and going forward, future years are concerned, the growth prospects are strong because we are coming out of such a drop in economic activity. The strong growth momentum is expected to continue. As you can see that in 2021, many countries are expected to have or record very, very strong GDP growth. For example, India 11.5%, China 8.1%, US also 5.5%, 5.1%. So this larger economic growth is going to be driven again largely by the US, Japan, China, and India. And other countries are also going to grow relative to 2020, but not as high as the advanced economies and China and India. At this point, Sri Lanka is projected to grow at about 3.4% this year and 2% next year. However, there are risks associated with this growth forecast. Well, the two important downside risks to the growth are the spread of the virus, continued spreading of the virus, and the potential delay in vaccinations around the countries. Also, possibly the tightening of the fiscal and monetary accommodations that have been provided by the central banks and the ministries of finance around the world. Then in response to the COVID-19 crisis, the inflation declined around the world. Obviously, there was a drop in aggregate demand, economic activity. Inflation naturally declined tremendously over that time period around the world, around 1.5% in advanced economies and about 4% in developing economies, due to the economic slack, high unemployment, lower wage growth, weaker aggregate demand, etc. As you can see, oil prices dropped tremendously low levels. In fact, the WTI dropped to negative, as you can see here, prices around April 2020. And now we can see the price have come back up very strongly to about $61, $64 range. So that's a tremendous increase in the prices since the drop. So you can also see here the inflation in the US. The black line has come back up to about 1.7. Euro area inflation also has in the recent month increased to about 1.3%. While the inflation declined, now there are increasing signs, at least expectations, that with the pickup of the economic activity and the aggregate demand, as well as the increase in oil prices and other commodities, inflation is likely to rise going forward. So in response to the inflation expectations and consistent with the higher growth that we talked about earlier, naturally bond yields also have started to increase around the world. Now I have, for example, here two of the most important ones for us here. The one is obviously the US, the interest rate here, US 10-year bond yield. You can see the tremendous rise of the bond yield from about mid 2020 to now to about 1.7%. And the blue line here is the sovereign bond yield for the longest maturing sovereign bonds, the international bond issued by Sri Lanka, maturing in 2030. Now it is yielding around 15.58%, so approximately 16%. You can see that the Sri Lankan sovereign bond yields also have increased tremendously from about mid or later 2020. So this goes to show that there's increasing concern about the rising interest rates around the world. Naturally, as the demand picks up, aggregate demand increases. And that is likely to cause higher costs for the government deficit financing, lower bond prices, potential capital outflows from emerging markets, and also could put pressure on the emerging market currencies as well. Another important aspect of the financial markets and the economies around the world following the COVID-19 crisis is what happened to the asset prices. Now, this chart shows the valuation or the increases in stock market indices around the world, the major ones. Obviously, the blue line here is the Sri Lankan Colombo Stock Exchange All Share Price Index is up 64% relative to April last year. And the US Standard & Poor's 50%, Europe area 43%, and Morgan Stanley Capital International Emerging Markets 56%. So tremendous increases in asset values, 40 to 60% range over 1 year period, which some commentators and economists might call asset bubbles. So stock prices are in very high considered bubble territory, may not be supported by fundamentals that are underlying the stock exchanges. So therefore, there's a risk that these asset bubbles might eventually burst at some point when particularly the inflation expectations and the interest rates increase going forward. So given the global outlook for growth, inflation, interest rates, bond prices, asset prices, I would like to now focus on the near-term outlook for Sri Lanka. So in the near term, which means this year and next year going forward, outlook critically depends on 3 things. First, obviously, the progress of infections and vaccinations. Further spread of infections, a potentially delay in vaccinations, a large percentage of population will obviously pose significant risk to the recovery of the economic activity. At this point, the pandemic is not expected to subside around the world until the end of 2022, at least on the basis of the current information. The second important thing is the ability of the Sri Lankan government to provide the policy support, continued fiscal support, continued monetary policy support to sustain the recovery and accommodate the financial and provide accommodative financial market conditions to support both the private sector and the government. And thirdly, the ability of Sri Lanka to take advantage of the global growth recovery, particularly through international trade. These are 3 critical things that would determine the near-term outlook for Sri Lankan economic prospects. In order to look at a more broader medium to long-term outlook for Sri Lanka, it's quite important that we look at some of the country-specific economic conditions. So I have listed some of the more important, perhaps critical conditions that we want to look at this point. And I will start with the growth. Obviously, economic growth is perhaps the most important of that, important variable that would underline the economic conditions prevailing in Sri Lanka. So the economic growth-wise, we have a very low growth trajectory. Looking at last 5 years, we have had a 5-year downturn trend in growth, and 2020 and 21 are not expected to be extremely high growth either. So sort of in line with some of the average growth rates in the past few years, obviously excepting for 2020, which is obviously unusual. Then in order to have growth, it's quite important for Sri Lanka to have robust capital growth and productivity. We have very low investment growth. Gross domestic capital formation or investment growth is quite low. And the FDIs, the foreign direct investments, have been less than 1% of the GDP for Sri Lanka. Our total factor productivity growth, which is one of the important determinants of the growth of a country, is negative. And also our capital efficiency is quite low. We have a low productivity of capital. In other words, we have to use a lot of capital to obtain a single 1% growth in Sri Lanka. So these are some of the fundamental issues in terms of the efficiency with which our capital is used, as well as the productivity of capital. Then I like to focus on the external side and the monetary side. As far as the external economy is concerned, we have had weak and volatile exports growth. Again, these conditions are not particularly relating to conditions this year. These conditions have been developing for a long time period in Sri Lanka. Well, this year, what is particular about the external side is that the tourism, which is quite an important part of our external balance of payments, the recovery is likely to be very slow. We have low foreign reserves, about $5 billion, and the currency has depreciated by over 6% this year relative to 2.6% last year as well. Then on the monetary side, we have seen very high money supply growth last year or so, particularly last year, primarily money supply growth to the government or credit to the government increased by 23% in 2020 compared to 8% in 19. That could potentially create inflationary pressures with a lag going forward with the recovery of the aggregate demand and perhaps rising oil prices as well. So not only that, we have very weak private sector credit growth. Credit growth has been primarily to the government and governmental corporations and not to the private sector. Also, we have seen increased monetary financing or money printing to support the deficit of the government. So having discussed those, now I would actually focus on the most important aspect of these macroeconomic conditions, which is in the middle, the fiscal and the debt. We have had high deficits in the last few years. In fact, this year it is expected to be about, at least from the data so far, about 10.5%. This is quite high. So our expenditures, government expenditures, are quite larger than the government revenue. Obviously, you would expect the deficit to be high in the unusual year, but this high deficit has been continuing for some time. Therefore, this is a concern. Then the most important of all that we all talk about, I'm sure, in various forums, is the debt situation. Sri Lanka has high levels of public debt. So $80 billion as a percent of the GDP, as a percent of the economy, it's about 99% now, the highest level we have seen in the recent past. The more importantly, out of that debt, there's a high level of foreign debt, 35 billion or 34% of the debt. And in order to service the foreign debt, obviously we need foreign currency. We are going to have to need $4 to $5 billion per year going forward in the medium to long run, given what we have issued so far in terms of international sovereign bonds. And international sovereign bonds alone will require about $8 billion in the next 5 years, or 2.2 trillion rupees, to service debt, to pay principal and interest obligations. So you can see we have enormous task in terms of debt service. Obviously, Sri Lankan bonds are rated low. Our credit rating is at a very low level, at CCC level. And as a result of that, reflecting all these macroeconomic conditions in a way, our international sovereign bonds now yield 16%. In other words, the investors are demanding about 16% from close to 10-year bonds issued by the Sri Lankan government to international investors, priced in dollars. That means it is about a 14% risk premium that they are demanding related to the US 10-year Treasury. So this is a good capture of the Sri Lanka's economic conditions. As I said earlier, these have not developed over a course of few months or over the course of the period after the pandemic. Most of these conditions have been developing at least for the last 10 years or so. So this has been a building up to a situation. So we would say that, we have fairly structural or chronic economic weaknesses going into the COVID-19 crisis. And now, because of the COVID-19 pandemic and the associated economic consequences, our economic weaknesses have become even much more aggravated. So, two more things I want to talk about. Now, given the conditions I described, what are the potential global risks for Sri Lanka? Well, as far as the global risks are concerned, some of the things that I discussed earlier, there's a possibility of high inflation in the West, particularly, leading to a raising of interest rates by central banks, particularly in the US, that can tighten the monetary conditions that could possibly affect the asset prices. The large advances of asset prices that we have seen could come to an end. Higher interest rates could obviously prompt capital outflows from emerging markets, including Sri Lanka. Although Sri Lanka does not have much in the way of foreign investments in treasury bonds remaining, and if at all, there would be more capital outflows from the equity market. There are also the equity market outflows have been fairly contained because the market participation by foreign investors has been quite declining over the last few years. So that capital outflows might not be a bigger problem for Sri Lanka. That's what I'm trying to say here. Well, because of this situation, it is very likely that Sri Lanka will have constrained access to international capital markets. And our debt situation is quite high. Cost of borrowing has skyrocketed. And therefore, it is going to be prohibitively expensive for Sri Lanka to raise capital from international capital markets. Also, there's a possibility that the growth rates I discussed earlier as far as 2021, 2022 projections for China, India, US, these markets where growth is likely to be higher, there's always a downside risk to those global risks as well going forward. So, to conclude, I would say that we have an optimistic but uncertain outlook. As I have discussed, the global and Sri Lankan economic growth outlook for this year and next year and going forward obviously is positive. This year is really positive for some of the more advanced economies, China, India, and some of the other emerging markets. And it is going to be positive for Sri Lanka as well related to the last year. However, the direction of the inflation projections or inflation developments and developments of the interest rates, particularly if they continue to go high, those will impact the global growth if interest rates are going to rise, if Western central banks start raising interest rates. Sri Lanka, with pre-existing chronic economic weaknesses, which I described earlier in detail, make the country more susceptible to global conditions. Therefore, economic reforms are necessary to address the growth weaknesses, the fiscal balance weaknesses, high debt situation, low investments and low investment growth, as well as the current account weaknesses, among others. So to conclude, I would say We need a long-term, more integrated market development, macroeconomic development plan with a credible implementation mechanism, which will be very important to achieving the growth and macroeconomic stability going forward. Thank you. I hope this gives a good overview of the global and the Sri Lankan economic situation and prospects. And I look forward to talking to you during the question and answer session. Thank you very much.
Thank you very much, sir. Now we have come to an end of very fruitful talks by the two expert panelists, Professor Dissabandara and Professor Lalith Samarakoon. So let us recap what was discussed in the two sessions, two talks, while providing with an overview of the current status and trends of the Sri Lankan capital markets by providing very detailed statistics about the behavior of the Colombo stock exchange in the recent time. Professor Dissabandara proposed some important strategies and solution to develop our capital market, as we would like it to be in the country's development process. And on the other hand, Professor Lalith Samarakoon explained how the COVID-19 pandemic impacted on the world economic activities, also giving a particular reference to the financial market, and also provided some detailed statistics observation on the Sri Lankan context. As we all know, the world experienced very significant declines in economic activities due to the COVID-19 impact, beginning from the first quarter of 2020. And the governments were forced to take extraordinary policy measures, as Professor Samarakoon detailed, to mitigate this economic and financial impact of the crisis. So Professor Samarakoon's presentation focused on a broader fiscal and monetary policy actions implemented by the countries, and then how it could have an impact on the key macroeconomic conditions such as economic growth, inflation, interest rates, asset prices, etc. So finally, Professor Lalith Samarakoon also discussed the broad outlook for the Sri Lankan economy in the context, this pandemic context, and also in the context of global dynamics. So, so with that brief catch up, let me now open up the Q&A sessions, and let me remind you, if you have any questions, you can type it on the chat box and send to us, and I will get some selected questions with the time availability, and then post on the two expert panelists. So let me start the first question from Professor Dissabandara. Now, as indicated in your presentation, Professor Dissabandara, now as Sri Lanka, we are experiencing very volatile price indices in the Colombo Stock Exchange, and also people are talking about share market manipulations. Don't you consider tough regulations and penalties are needed to develop the Sri Lankan market? Because even after 45 years of opening up the economy for private sector orientation, so still we are talking about developing the share market or developing the Colombo Stock Exchange. So what do you think that, how do you put the share market activities on the correct track? Do we need the further regulation? Because as you have indicated, now even our Colombo Stock Exchange, now it has been well established, all the regulations are in place, and we have very experienced Securities and Exchange Commission and a stock exchange. So what's your opinion?
Thank you, Prof.Athula. I think, as I understood, you're asking whether we can streamline the market using tough regulation. I think that is your question, underlying question, right? Yes, in a way, you can have regulation. So if you have your son, the son is not not in line with your thinking. Do you think always the punishment, the regulation will work? Right? Same way, there's a limit. So you can have your regulation on your plate, and you can implement it. Yes. And if the regulation is not enough, not adequate, you have to formulate it. In certain areas, I see, based on my experience at the SEC, in 2012-13, depending on the things happen and we experience, we started formulating the act, but still it is a bill. So I take your point. In a way, in some areas, yes, we need regulation, but you can't run a market with 100% regulation. Sometimes it will be over regulation. So we need to understand the balance, right? First thing is, rather than imposing these regulations are important. That is no question, right? The thing is, we need to educate each and every participant. Most of the time, what I have seen is inappropriate understanding that is there. So we need to educate them thoroughly. And at the same time, we have a very good surveillance system at SEC as well as CSC. So if there is any wrongdoing, any malpractice, so without any further delay, we must take action against it, without delaying it. So then people have the trust that if you do this, things will follow you. So therefore, one thing is, once you notice something, if it is wrong, if it is inappropriate, we have to take necessary action using this the straw regulation, right? But in a country like Sri Lanka or any country, I don't think only through regulation you can develop a market. So these two are two different approaches. You have to have a balance in between regulation and market development. So in certain areas, people speculate. You can't say speculation is wrong, because it is up to you and you take that risk. But because of the speculation you have, you can't disturb the market. So then regulator must intervene. So that's the point. So you need regulation, but it should not be over-regulation. And at the same time, you need market development, but the other participants, those who play in the market, must be educated and well-disciplined. So that is what we want.
Yes, I think it's very much clear your answer. So your answer basically suggests to have a trade-off between regulation and market development, and making an awareness among the investors within the market is pretty much important, so that those people who wanted to manipulate the market will have a lesser chance of doing that.
I think
So
Lalith Samarakoon also can add something. So yes. I would like to see his thoughts as well.
Yes, right. So now I would like to pose a questions to Professor Lalith Samarakoon. Now, in your presentation, Professor Samarakoon, you mentioned with statistics the challenges that Sri Lanka would face in future in servicing debt. So what are the options for dealing with this high debt burden to our country? Professor Samarakoon?
So you are muted, I think.
Yeah, you are muted. sir.
I think you picked the perhaps the critical part of my presentation. As I said, the middle box of the conditions prevailing in Sri Lanka. Yeah, certainly the debt is obviously the most talked about and most disturbing economic financial conditions that we are facing. In our economy, if you look at the historical development of Sri Lanka, well, there are obviously a lot of options available. And I would say that overall, we have got to look at creating our own destiny in terms of dealing with the debt. Obviously, the best option is to grow out of debt. So how do you grow out of debt? To grow out of debt requires economic growth. So we'll have more growth. The more growth will lead to more fiscal balance, more income for the government. So government will be able to service the debt, and over time will be able to reduce the debt burden, right? So higher economic growth is obviously more important. It is the most important aspect of it. In the short order, however, since economic growth takes time, cannot achieve higher growth in a very short time period. It requires a lot of preconditions as well as investments. Therefore, in the meantime, it is quite important that we do consolidate our fiscal situation. So budget deficit is quite high and rising. So we have got to take control of the revenue as well as the expenditure side of the budget. And through that, obviously, if you practice that, execute that with a plan over time, we might be able to grow out of debt. Again, it requires a lot of conditions that would need to be put in place. The other option, obviously, is debt restructuring. This restructuring involves, in the first place, some sort of a debt rescheduling, what we call the reprofiling of debt, either extending the maturity or lowering the interest rate in some form, debt rescheduling, so that we can manage serviceability of debt. We can manage servicing of debt within an extended time period with less financial distress on the Sri Lankan government. Obviously, part of restructuring could be debt negotiations for debt reduction. That obviously is the second in order in terms of debt restructuring. Negotiating with our lenders. So remember, we have commercial borrowings, which is obviously the most important part of debt, as well as non-commercial borrowings, sort of a concessionary project loans, bilateral, multilateral loans, etc. So that part is obviously something we could obviously negotiate with the bilateral, multilateral lenders as well. But I think the most important part is our market exposure, commercial borrowings, and that's where obviously immediate action would have to be planned out in terms of possibilities for debt restructuring as well. Otherwise, this debt overhang is too large given our conditions and would obviously depress the growth going forward for an extended time period. Therefore, earlier we handle the situation, the better it is in terms of the first and the most important part of the solution, where we come back to a sustainable high growth path. In my opinion, we need a high single digit growth. You're talking about, at least 6, 7, 8%, if not closer to 10% growth for an extended time period, such as 10 years, if we were to successfully grow out of debt. So that's an enormous challenge, but could be done with a proper macroeconomic plan. So that's in short, I think what we can do. But there are obviously certainly other options in the third and the fourth order of priority as well.
Right. Thank you very much.
You're welcome.
Mr. Lalith Samarakoon. I think it's very clear. So in particular, we have to look at achieving very high economic growth consistently over next maybe at least 10 years. And while doing it, probably you also suggested some other strategies that the government could adopt to managing debt, like restructuring, negotiation, like to reduce the debts, like that. So I think those aspects are very important if you want to, if our country wants to effectively manage debt in the coming years. So let me now pick some of the questions from our audience. So one question asks, do you think the increase of all share price index and S&P index is a real growth? Because last year and this year, the economic growth is between -2 to +2. With the backbone of economy, can we believe this trend? So the participant basically asks whether you could believing the price indices of the Colombo Stock Exchange, because our economic growth rates says otherwise. So I would like to pose this question to Professor Dissabandara. Would you like to answer this question?
Thank you, Prof.Athula. A bit difficult question, right? But I think I explained at the very outset, in Sri Lanka and even a few other countries, this happened. Maybe sometimes due to the pressure. It's a kind of releasing pressure because they have been waiting several months during the quiet period. First cycle. Then they were basically idling. But when that rally, the situation is recovered, so then people came into the market in most of the places. That's what happened, and they tried some of the shares, some of the stocks, some of the securities. And most of the countries, it is very difficult for us to explain the fundamentals and this behavior. So in Sri Lanka also we could see, but in Sri Lanka especially, during this period, our rates were very low. Interest rates were very low. In Sri Lanka, it is very clear when the interest rates are low, people come into the capital market, especially the share market. And they, invest in the market. Most of the time, as I explained, their financial literacy level is very low. Most of the time, what they do is they follow the footsteps of others. They are just followers. Sometimes they copy others, and they try to become someone. So when you follow in such a way, what happens is without following fundamentals, without seeing the value, you just play in the market. Sometimes they, it is popular in Sri Lanka. So rather than fundamentals, word of mouth is the most dominant way in the market. So there are a lot of rumors every day. Now, yesterday, the day before yesterday, especially yesterday, we heard a lot of rumors. So when we hear those things, if you do not analyze those, so things can happen. So I think some of the reasons were due to ignorance. Sometimes maybe some culprits are trying, and that can be there. So I think so our surveillance systems attached to the SEC and CSC should be able to catch if there is any significant attempt, any pump and dump scheme or any other market manipulation, that should be noticed. And even they can record and play and replay. So that is there. So if there is any significant market manipulation, I'm sure they will take action. They would have taken action. So other than that, there can be various reasons for them to, come into the market as per the, things happen in the last few months. But nowadays, what is happening is in Sri Lanka, the market is, all share price index is coming down. Yesterday we had green, but throughout the last 2 weeks, I think, yes. So there's a kind of selling pressure. So this is a mixed result, and that is why I always say, so people, those the first comers, the first timers, they must be trained. For that, the unit trust is the best place. And if you come to the market, share market, you must be educated adequately. So that is a must.
Thank you very much, Prof.Dissabandara. As you all know, our normal literacy rate exceeds 90%, but our financial literacy rate in our country, I think it's in 30s. So that is an indication of, in general, how much our level of awareness in general are lower.
Sorry to disturb you, Professor. Now,
Yeah.
that's again general financial literacy. When it comes to stock market, capital market literacy, it is far below. It's 5%, 6%, we are below 10%. So that is why we have to have nationwide, rather than having ad hoc training or education from the school, university, and even in public, if you take Thailand, they have only 2-3 decades of experience. But see, every town, every major city, they have investment centers. So if you go to the first floor, that is just a cafeteria. So, but you can see some attraction points. Then you will go to the next floor, first floor. There you will be trained towards investments, savings, and investments. So likewise, so we have to have a nationwide, because capital market, it is implanted here, right? Even though we have more than 100 years of experience, it is implanted here. The majority of the people, they don't understand this properly. So therefore, this education is a must. Unfortunately, most of the people, they cannot understand. So in our capital market master plan, this should be within first 3 items: education and awareness creation nationwide.
Thank you. I think it's very clear. Now, Professor Samarakoon, in your previous answer to my question, you highlighted one of the must thing is that Sri Lanka needs high economic growth if we want to effectively face to this larger debt serving. Now, high growth needs high investments, obviously. So how do you think Sri Lanka would find capital for growth? Over to you, sir.
Oh, thank you. Thank you, Professor Ekanayake. Obviously, that's a critical question in terms of achieving high growth. As you know, growth necessarily requires investments, right? And one of the fundamental weaknesses we have seen in our country is that investment growth has been quite volatile or low. Particularly the investment component of the GDP. We wanted to look at the gross domestic capital formation, as well as the foreign direct investments. As you know, foreign direct investments have been quite extraordinarily low in any event, less than 1%. Maybe only in 1 year or so we reached very close to 2% in the recent past. So we have never had a sustained inflow of foreign direct investments in large numbers to our country over the last 10-year period, if you want to look at, right? So those are 2 important points: lack of investment growth, lack of foreign direct investments. And also, one of the facts that I mentioned briefly in my presentation is that even the investments that we are making is highly inefficient. In other words, in order to achieve 1% growth, we have to make close to 10% investments. So that's more like the capital output ratio for Sri Lanka. That's quite high. So we need to put in more money to get 1% growth. So I mean, the capital that we have is not being efficiently utilized. That points to the fact, obviously, we have very low productivity of capital. Well, related to that, obviously, to economic growth is we have very low productivity overall as well in the economy. So to answer your question in that light, obviously, we have resorted to what we call the debt capital. And we have been accustomed to raising capital through commercial borrowings over the last decade or so in great numbers. I think that's where we need to put a stop. In the sense, obviously, we have got to service and we have got to manage the situation going forward. So we would still need to borrow money. But I'm saying in the large gamut of things, the large scheme of things, we have got to get foreign direct investments, non-debt creating capital in large magnitude. And we have a large investment savings gap in our country. So how do you solve that gap? We have got to get capital from abroad. Capital flows are important, but not the debt capital, rather equity capital or foreign direct investments, which are invested in export-oriented industries for the large part. Secondly, that's the foreign side of the capital formation. Secondly, that we have domestic capital, which are not really harnessed or leveraged in an efficient way. So we have got to give opportunities for the domestic capital, domestic companies, private sector investors to participate in the development process. Particularly if you think about the large investments we need in infrastructure and things of that nature through either a PPI or some form of private sector participation program, we have got to harness them. And towards that, what Professor Dissabandara said is quite important, that we have got to develop the domestic capital markets. At least now we have to realize, if not for anything, when we are in distress and we are unable to raise capital from abroad, and we have to at least have a domestic capital market that is robust enough so that we can actually have a platform, either it is a primary market particularly speaking, or in other forms using both the corporate debt and the equity market to be able to raise funds for the development of projects with the private sector participation. And finally, I would say that directing our savings, again, this is related to the capital markets as well. Whatever the savings we have, they are not efficiently geared or channeled to productive investment purposes. So the savings go to either fixed deposits, as we know, and property sector. And so that results in asset bubbles in that sector as well. So the large amount of savings we have are not necessarily channeled in an efficient manner to invest for growth in the country. Obviously, those are very high level points, Professor Ekanayake, and easy to say that, but there has to be obviously a concerted development is not just one piece of a puzzle. It's a complex mechanism, right? Everything is interrelated. Therefore, as long as we don't have that integrated holistic idea, of some of the pieces of the puzzle that I mentioned to you, whether it is a real sector, external sector, financial sector, capital markets, all that. They're all interlinked. Therefore, you cannot think about investments or the growth in isolation. That's why I think the most critical part of that is, as long as we do not figure out this integrated macroeconomic management executed in a it is very difficult for us to really achieve sustained economic growth, fiscal consolidation, or solve any of the problems I talked about, or mitigate any of the problems I talked about earlier. Therefore, I think we need a complete change in the way we manage for the long term with a long-term macroeconomic development framework, which will address these imbalances. The growth or investments or external sector, they all are related. So therefore, just looking at how to solve the debt problem right now, obviously, you cannot, it doesn't work that way, right? Because the debt problem is a weaknesses in the economy, including in the budget deficit, right? Therefore, everything has to be looked at in a holistic manner. I hope that answers the question about what we need to do in terms of getting the investments to the growth equation.
Thank you.
Thank you.
Samarakoon, one related question from the audience. How about public-private partnerships?
Well, I think that's definitely important, because obviously we are at a situation where we don't have foreign direct investments. We have to create conditions for that. There's no question about, but it takes an enormous effort to do that. And we cannot borrow any longer. And does not have the fiscal space to do that. Therefore, it is logical, right, that we actually go back to the drawing board and say, well, what have we done with our private sector? Private sector has capital. Some of them have invested abroad, as you know, right? And some of them are not investing. They have capital, they are not investing because they don't see profitability in their investments. They don't see the returns in their investments. Therefore, we have to get the private sector to participate in development. Particularly, I would think infrastructure development, which is key, which requires lots of money. The private sector can leverage their expertise and the strengths to obtain money from abroad. So they can partner with companies or the others abroad, but it doesn't have to be the government contracting with other governments or other private parties. As long as that they are provided with a mechanism where they're going to see the cash flows and return on investments that is commensurate with the risk that they are taking, and they are able to manage their investments in the long run. These are long-term projects. I think that will work out very well. So I think that's an equation, whether we like it or not now, we are forced to think about those. So I believe that that's an important thing. I subscribe to that. Just like the capital market development, right? Well, why do we have to do that? Well, we have to at least harness the capital market power within the country. So domestic capital markets is important. Similarly, we have got to harness the capital base that in the Sri Lankan private sector and give them an opportunities to participate in the development.
Thank you.
Yeah.
There's one question from the audience. How does the rupee devaluation in this period impact to the trends of all share price index? Prof.Dissabandara, how did the rupee devaluation could have an impact on the all share price index?
I think for locals, it is not a problem, but this affects only to the foreigners. And when they come and invest, the exchange rate matters. But on the other hand, when they bring, when we make profit, so it is again it's a plus point. So when we have more and more foreign participants, foreign companies and foreign individuals, this will be a problem. This will be a real problem, and this can be one of the reasons for foreign outflows, net foreign outflow. But we need to analyze and see why this net foreign outflow. Is it mainly due to foreign currency, exchange rate? So exchange rate can be one of the reasons, but I don't think it is the only reason.
Yes. Thank you. And I think we are running out of time. So before we wind up, now this is our country, and we all, as citizens of this country, want to see that the country's economy is doing better. And as we have discussed in this webinar series, that one of the important requirement in this development process is that we need to develop our capital markets. There is no doubt about it. And we have to manage the debt properly. We have to have a proper economic development plan for the country. So which all gives us a better strategy to develop our country. So from the two panelists, I would like to ask, so what's the take-home message you are giving to the participant of this webinar today? First, I will ask from Professor Lalith Samarakoon. Sir, would you like to give a take-home message for our participants overall as citizens of this country who loves it very much?
Well, I think obviously I try to give you a realistic, fairly objective viewpoint of where Sri Lanka is in terms of its economic situation, right? So that's fairly objective, and getting out of those problems, we all want to do. We want to see that Sri Lanka is on a sustained growth path that will lead to more prosperity for the citizens of the country. I think we all have to think beyond these micro problems and ask a question, why haven't we been able to figure it out since the independence? So it's been all, we've been talking about this ever since. It's all low economic growth, sometimes high inflation, sometimes high budget deficits. All these issues that I talked about, we have seen over and over and over again. So I think that's where, as citizens, we want to think about turning the corner. There has to be a different way of doing things. Think about that. I think that's my message. In my opinion, that requires a long-term vision, which includes a long-term socio-economic development plan. And all what you have to figure out is how is Vietnam, how is China, how is Bangladesh, Laos, Malaysia, Indonesia, Korea, How are they doing? They have had a 5-year plans for the last 20, 30 years, managed professionally, executed professionally, decoupled as far as possible from the politics. So without that, we'll be just going around and around. Therefore, my message is we have got to think about a different way of doing that. In fact, the National Economic Council a couple of years back was formed just to do that. And we were at the point of developing a 5-year integrated macroeconomic plan with Professor Dissabandara, Mr. Jayewardenepura, and the others contributing, leading that effort at that point. And obviously that effort ended with the change of the regimes. But we have got to think about going forward an integrated long-term macroeconomic development where we can address these issues in a holistic manner. Therefore, trying to address this year's debt payments or next year's debt payments in terms of finding money for that would not accomplish what we need to do to take Sri Lanka forward towards a sustainable development path. So my message is obviously think differently. Think differently because what we have done so far apparently hasn't worked.
Thank you very much.
Thank you.
Prof. Dissabandara, would you like to give our participants a take-home message?
Yes. First of all, I would like to thank Professor Lalith Samarakoon for the wonderful presentation covering lot of aspects. I think within 30 minutes, even I can't imagine how he did this, right? So it's a challenge, right? It's like a drone. He scanned every aspect, and he related the global aspect to Sri Lanka and Sri Lanka's development. Thank you, sir. I too learned a lot. I fully endorse what Professor Lalith mentioned. We have been doing a lot of things. We have been thinking about Sri Lanka's future. Now he explained, he mentioned about several countries. If you take India, China, these growth rates they have achieved after 60 years of work or 65 years of work. Why is that? 12 or 13 5-year plans. So as he rightly pointed out, they planned 65, 70 years ago. And this was a habit and a practice. And once that particular 5 years is over, they think about what they missed. They incorporate that into the second 5-year plan. And they thought about next 20 years. And that is how they proceeded. So therefore, overnight, you can't change all this. Therefore, we have to think very, very critically in a novel way. And we have to have that courage. And we should, rather than following someone else, think about Sri Lankan ground, Sri Lankan context. Get something important if it is relevant from the global and act locally. That is what is required at the moment. And especially, it is very clear now for several months, these opportunists from the foreign parties as foreign investors, they won't come. So until we formulate something inside the country in a better way, so they will be watching us, right? So what we have to do is we have to develop this. So until they come, we have to have a local market, right? So local market, what we want is, as Professor Lalith Samarakoon correctly pointed out, we have to have local savings. But the thing is, in Sri Lanka, you can't save sometime, because even though we had a very nice history of saving in various ways, so we need to redefine it. So most of the time, I would like to say, we have to have a practice before save, you have to have economically live. So in Sinhala, this is Arapirimesma. Arapirimesma නැති ජාතියකට ඉතිරි කරන්න බෑ. So this economic behavior, the Arapirimesma, so you have to take it from the home. And at the same time, as he rightly pointed out, when you take our investments, the productivity of our investments are low. Why? That is Arapirimesma. So we don't know how to utilize it. So Arapirimesming itiriyen ayojaneta. If you don't have Arapirimesma, the economy, you don't have saving. If you don't have saving, don't go for investment. So to accumulate savings, you have to have this in the country. So in the government sector, a lot of waste. Public sector, a lot of waste. So we have to think all, and we have to have integrated plan, as you have been pointed very correctly. That is a must. Even in the capital market, what we have to do is, now if you take Thailand, Malaysia, those who had wonders during the last 2-3 decades. So what they did was they had capital market master plan 1, 2, 3, and so on. So in Sri Lanka, what happened was, we have some plan. So when someone dictate, we do something and we keep it in our drawer. So when next regime comes, you do it from the beginning, and that will over. So we do not continue. So what we have to do is, we have a dedicated, integrated plan for the economy, for the capital, for everywhere, and we have to implement in a very close way. We have to see almost all the deviation, even tiny thing, and must be investigated. It should be addressed in our plan. So otherwise, there's no other way. So therefore, we have to practice this at our home, at our workplace, and we ask our leaders, right? Rather than regimes, what we need Sri Lanka. So this is a golden opportunity we are passing. If you do not think and plan for this, we will not having a country in some time. So in few years. So this is the last chance we get. So I think this message must go everywhere, and everyone must participate, and they must try to save something and do something effective, productive for the betterment of the country. So that is what I have seen.
Thank you. Thank you very much, Prof.Dissabandara. So this ends our webinar on the topic of the prospect for the Sri Lankan capital markets and the economy in the aftermath of the COVID-19 pandemic. So let me take this opportunity to thank our distinguished two panelists, Professor Lalith P. Samarakoon and Professor Harindra Dissabandara. I think your presence, your gracing in this webinar add a lot of value. So I'm sure that the participants were well aware of most of the recent aspect of the capital market, the economy, not only within the Sri Lankan context, but in the global context also. So let me thank on behalf of the iPURSE organizing committee of the University of Peradeniya. Thank you very much, both sirs, for your presence today with a lot of busy schedule, in particularly Professor Lalith P. Samarakoon, who is in the US, and I think now it's almost close to the midnight, but still you have given us the fullest support in participating in this webinar series. Let me also thank the participant for their participating at this webinar and then asking questions. So I'm sure that you have taken some very important information about the country's economy, the capital market, the financial market, etc. And before winding up, I would also like to thank the organizers. Now this year, the iPURSE is organized by the Faculty of Arts, University of Peradeniya. And I would like to thank the Dean of the Faculty, Professor O.G. Jayewardenepura, and the team. And particularly this session is organized by, coordinated by Dr. Fazia Asmi, and the team, she has Mrs. Kalhari Abekon and Ms. Udani Vijayaratna, and also we have some technical staff. I thank on behalf of the Faculty of Management for the support that they have rendered in conducting this webinar series. And also I thank Mr. Amila Bandar, my colleague from the Faculty of Management, to coordinating this particular webinar series. So ladies and gentlemen, thank you very much once again, and have a good day. Thank you very much.